Hello everyone, welcome back. I got a lot of really good ones for you today. But first, hope you had an awesome day. Markets. Start with the bond market. The 10-year yield came up a little bit today. That's spooky. We've talked about how rising yields, interest rates, and the dollar kind of puts pressure on risk assets. You saw that at play today with that 10-year yield moving up, kind of spooking the stock market. Stock markets, all three major indices took another dump. Kind of is what it is. The dollar made a nice move higher, crushing precious metals, stock market. Bitcoin under pressure, barely clinging on to that $20,000 psychological support. So rooting for Bitcoin, I think it's a strong psychological support. But hey, if those rates and yields and dollar keep rising, look out below for the stock market, Bitcoin, precious metals, risk assets. Oil is an exception for its own reasons. We've kind of discussed in previous videos the really bullish case for oil and energy. Oil made another move higher today. Other than that, though, not really a whole lot going on in the markets. Do keep an eye on Kaliningrad, developments there between Lithuania and Kaliningrad. Lithuania is a NATO and EU country. They're cutting off the supplies. Hopefully they stop doing that because it's kind of freaking people out. Kaliningrad is separate from mainland Russia, okay? So they resupply by rail through Lithuania, and Lithuania's got a blockade up. Hopefully that eases, only to get NATO guns and Russian guns from pointing at each other, because the conflict area seems to be widening and escalating, and we have additional hotspots forming, right? So just keep an eye on developments between Kaliningrad and Lithuania and Russia, and then obviously the developments in Ukraine and Russia, which are just all that. Keep an eye on that, not good. Yeah, not really a whole lot. Nothing's too much has changed in the last 24 hours. I don't like the Kaliningrad blockade, and I don't like the rising 10-year yield in dollar, but I also don't like this inflation problem, right? And that persists. And consumers are, consumer sentiment is very, very low, multi-decade lows right now with regard to consumer sentiment. People are just, their credit cards are maxed out. Limits are being reduced on credit cards. Inflation keeps decimating everyone. And the middle class is just doing anything and everything they can to maintain the same standard of living. And, it's just getting really rough, and people aren't acting right. So, just raise your awareness. Anticipate, don't react. Be proactive, not reactive, right? And just kind of be a little bit more aware of what's going on. People are really hurting right now, so just kind of be sensitive to that for a whole host of reasons. I'd say most global citizens at this point kind of have a laundry list of things that have upset them over the last few years. So just kind of be aware of that and hang tough. Yeah, I have no idea really where we go from here. I'm still tentatively bullish NASDAQ, Bitcoin, oil, gold. I'm not a dollar bull, but hey, we've talked about it a million times. The rising yields, rising rates, rising dollar environment it's just crushing all that because the Fed's trying to get inflation under control. And they should be. People are saying, they're behind the curve. You're hearing that in the headlines all the time. The Fed's behind the curve. The Fed is the curve. Fed did this intentionally. This was all engineered and by design. I don't think this is an accident, or any of this was. And with that being said, nor do I believe that the Fed is going to raise the federal funds rate 9% in the coming years to effectively break the back of inflation. I think at a certain point, just my thoughts, just where I see going, leave a comment where you think you see everything going. I think the Fed is going to capitulate to broad sustained inflation, and start doing UBI, MMT, just more and more spending. Because in my view, the dollar is just kind of pathological, and you're seeing every attempt this last 6 months for institutions to raise interest rates and kind of rein that in. But I mean, the inflation genie's out of the bottle, and they would have to do crazy interest rate hikes, not this 75 basis point stuff, which they claim is going to be really rare going forward. That tells you right there they're going to stay terminally lower than the inflation rate with their interest rate. So I expect inflation to persist, and we're just going to have to deal with it. Have some food store, have some cash on hand kind of thing set off to the side, like 3 to 6 months, where you could just kind of sustain yourself, and then that will give you the mental peace, knowing you have your emergency fund set aside and your 6 months of food set aside. That'll give you the mental peace to invest, trade, speculate in markets right now, which in a weak dollar regime is a good way to stay ahead of everything. So yeah, crazy. One thing that's not getting a lot of play but doing really well, fine art, is like smoke checking the stock market and Bitcoin and even NFTs. It's crazy. So art's in its like stealth bull market doing really well, keeping its value. So those real assets, right? If you have like no debt and then you own like some nice art, some original art, and just some inflation hedges, some physical precious metals, some real assets like real estate. Oh man, productive land would be amazing. Ideally productive land with 2 different fresh water sources, So that stuff's in right now. Like that, real assets are in, commodities are in, okay? Traditionally, the financial sphere doesn't care about commodity prices or even want commodities to do well, if you think about it. Commodities are just a non-productive to finance benchmark that they compete against. But right now, commodities are in, real assets are in, counterparties are not in. People are worried about doing business right now and being weird. So fine art's in, grandpa's pocket watch is in, squishmallows are in, beanie babies are in, any real estate, any real assets. Real is the secret. Gold coins, platinum and palladium would be great too. Another reason commodities are performing so well, not that I'm like a war profiteer, but when the world goes to war, commodity prices do start to do some weird things and catch some weird bids. Just look at like the platinum group metals, like platinum, palladium. I want to say probably 80% of the global supply of those metals is South Africa and Russia alone. I mean, I could be mistaken on that, but my point is, when you have these like weird changes in the world order or, geopolitically destabilizing events in these countries that source a vast percentage of a certain commodity, you see those prices just go through the roof. It makes sense. Like, we're not buying platinum and palladium from Russia right now, right? So where are we getting it? South Africa, probably. Other places, sure, it's all good, but you can see how commodities get these like weird bids and go into these weird cycles and get these weird dynamics going when the world goes to war with itself, or people start squabbling over business. And then also weakening currencies, right? All the gold ever mined in the world over human history could be poured and fit into 3 Olympic-sized swimming pools. That's it. All the gold ever mined above ground right now in humanity's possession could fit into 3 Olympic-sized swimming pools. Not a lot. Platinum, same thing, would fill to your ankles on 1 pool. Not a lot of it. So owning even stuff like platinum and palladium, even though platinum is more of like an industrial metal, right? It's not like the money that is physical gold, but platinum, palladium, silver, gold, honestly, even copper. Granted, copper is kind of more or less an industrial metal, and it's tied to actual economic growth and investment. But if you had a big scrapyard right now, I might take that over a briefcase of dollars. If that scrapyard is just loaded with copper and, catalytic converters and, so real assets are in, prepping's in. There's a lot of channels where you can kind of dive into that stuff. So, I mean, that's kind of your dynamic right now. Just be careful, be safe out there. Keep an eye on the markets, keep an eye on Kaliningrad, keep an eye on the Fed and the other central banks, and we'll be good. We'll be good, and store some food. Why not? But not. I actually looked up all the amount of grain that Ukraine exports versus how much is consumed globally each year, and it's freaky, but I'm not going to be the one out here peddling like in 3 months we're all going to be out of food and they're going to starve us. Now, am I saying we should be ready for that? You should be ready to eat or sustain yourself for 3 to 6 months. Yes, like make sure you can do that. But I know you're hearing a lot about food shortages and the coming famine and everything. And don't get me wrong, countries where their people are already living close to abject poverty, this is not good, you know. So it's scary and it's horrible. But if you're an American citizen or in a more developed country, just get a little bit more food stores, try to get out ahead of everything, and try to just be optimistic and chill. And so I'm not calling for the end of the world and the coming famine that you're hearing so much about, but hey, I am kind of monitoring that, and maybe that'll change. So we're tentatively optimistic, but just kind of raising our awareness and paying attention to what's going on around us, and we're going to be all right. We're going to be good. That's really all I got for right now, and till next time.